Hey traders, welcome back to another Sunday video where we take a look at trading setups for the week ahead. In these videos, I go over some of my current positioning as well as some of the things that I am looking to potentially take advantage of in the upcoming week. And at the very least, even if your styles are different than mine, I hope what I can do in this video is to just give you a little bit of an overview of market structure as well as the fundamental analysis that I've been doing myself. I do try to mix a good combination of fundamental analysis, which is economic data, as well as looking at sentiment indicators like commitment of traders data, as well as a simple analysis using technicals. But I keep my technicals very simple. Fundamentals, I do try and go a little bit further so that we can understand what the real moves behind these markets truly are. So as we get started, I want to ask a favor of you. If you could hit the thumbs up button as we get started, that would be amazing. And let's go ahead and jump into it. First thing I want to say here is before we get too technical, I just wanted to show you my performance on the last 1 year. I do this periodically to show some credibility in helping to let my audience know you're not wasting your time watching my videos. I am not going to claim that I am the greatest trader of history. I'm up just about 20% in the 1 year. In the last 1 year, it's not an exceptional, best you've ever seen return, but it's real. I show you this on a live track record. I do this as sort of a live track record, a login, if you will, on a regular basis, just to show, where I am with my trading, because I'm not perfect like anyone else, but I am profitable, and I do that so that, you watching this video, you're not wasting your time. Okay, so let's talk a little bit about what we're going to do here from a high level is I'm going to take a look at some indices here today. I'm going to look at commodities like gold, silver, etc. May look into crypto, may also look at some currencies, but I've got a lot of stuff to get through, so let's go ahead and jump in. The first one I want to look at is actually gold, which is sort of an interesting topic right now because gold is just in a monster upward trend and starting to potentially pull back. But I want to show you guys something. If you missed my video yesterday where I went over the commitment of traders report, I'll pull this up and we can look at how interesting this actually was for gold. So if you're a regular viewer, we discussed the COT report, which is tracking institutional money and flows of that money every week. Gold has been a consistently bullish position for institutional money all year long. And if you had tracked this by yourself, how many trades would you have saved just knowing that, institutional money is very long gold? I probably shouldn't get too bearish myself. Again, because these are the pros. This is the big money. What are they buying? What are they selling? Well, what I wanted to show you on this, long story short, is if we scroll down to the latest report here, the latest weekly filing actually shows some pretty bearish trading activity. The number of short contracts for gold, guys, it really ramped up. They shorted a lot. They also, check this out, they closed long contracts. When I say contracts, for the FX guys or for, people out there who aren't familiar with what I mean by that, that is futures contracts, right? This is tracking gold on the futures market and the activity done by institutional money. We've built this indicator to help you visually see it very easily. Well, gold has a pretty bearish week behind it, meaning a lot of trading activity done by institutional players was actually on the bearish side. However, hold your horses because gold is still very much positioned on the bullish side for institutional traders. The reason I pull this up, however, is that perhaps there's a little bit of an ongoing sell-off that is also institutionally conducted, meaning maybe there's a little bit of big money kind of exiting positions, taking profits ahead of the elections, because many people know once the elections start to sort of develop, that there's a clear winner, gold's premium that it's being paid for, right? People are paying a premium for gold right now because it sort of cushions that uncertainty. People like to buy and hold gold when they're uncertain about what's happening in the world and the election, the Middle East, the Eastern Europe, right? There's just uncertainties. Taiwan, China, there's uncertainties all over the place. So if we're losing the election story, meaning it's largely expected that in the next few months we'll have a relatively peaceful, passive power. We don't know how that's going to go, but if that is the case, perhaps that is what institutional money, big money, essentially is seeing. Now, again, I've tracked the COT report in depth in yesterday's video, but that was one point that really stuck out to me is silver and gold. Actually, I don't know about silver. Did silver also get sold? Yes, it did. Actually, look at the commodities across the board, guys. They sold silver, sold oil, sold gold, and they even sold a little platinum as well. So really interesting just to see where the institutional money flows are happening. By the way, if you're a regular viewer of my channel, I should mention this. We're actually just kicking off our Black Friday 40% off sale. There is a link and promo code down below in the description. I know a lot of you guys watch these videos every week. A lot of my audience on my YouTube channel just loves the Sunday videos. If you're somebody who's watched every week for, a while and you're like, I've been waiting to get the Edge Finder for a long time. Well, today's your day. Today is the biggest discount that we're doing all year long. So we're kicking off our Black Friday sale. It runs for the next few weeks, and it is a chance to pick up a copy of our software for the lowest price of the year. So don't miss it. All of the information can be found there. If you already have the Edge Finder, by the way, check out this section on the Edge Finder. We have a Black Friday section where you can get all the information on different things. You can get access to the Signals Room. You can access to Chris Pulver's new service that he just launched with us. We have the stock box, which is brand new, which maybe we'll showcase later on in this video. But again, I just wanted to call attention to that because, again, this is no joke, our biggest sale of the year. Black Friday is always an exciting time because we can get a lot of copies of the Edge Finder to people for much more affordable prices for a lot of people. So if you've been waiting on the sidelines, here's your chance. You get access to, of course, all the different market scanning software that we have here, the top setups algorithm, which helps me find the trades that I take, the commitment of traders data, so you can track all the institutional money yourself. You don't have to hope that I pull it up in a video someday. I do some weeks, I don't every week. So if this is something that would be beneficial to you, get a copy for yourself while it is on super sale. All the information is linked in the description of this video. Okay, let's keep going because I want to talk about something else here, which is the indices. The S&P 500 also saw some pullback, but what I thought really interestingly on this side of things, just to bring up the commitment of traders data one more time, because it has been such an interesting week in COT world. Look at this. They added long contracts and decreased short contracts for the S&P 500. And for the NASDAQ, there was also some bullish lean. What we see here is that during this pullback, it seems like institutional money could potentially be looking at this favorably as an opportunity to buy the dip. I know personally that is what I am doing. However, I've paused adding new positions because the top setups page lost the indices with this kind of bearish price action. Where we lost some of the score, by the way, is let's just do this and I'll show you the category. We'll go indices. And you can see we have some bullish indices, but for the US ones, we lost a little steam with this bearish trend reversal. So, I think the Edge Finder here does take into consideration both the economic data and sentiment, but also looking at technicals. Seasonally, it is a very bullish time. Last year, I had one of my biggest trades going long the S&P 500 on November 1st due to this reason right here. In fact, I need to show you guys that because that is a very important theme for this month, which again led to last year one of my most profitable points of the year. In fact, I'll show you that. Okay, so this is 2023's P&L for me, and I just wanted to show you this November chart. This is what happened in November of last year. We had an absolute monster rally to end the year, and I was very positioned for it thanks to the Edge Finder. I really liked the seasonal setup that I saw. I liked the technical breakout that formed. And again, that was following a pretty nasty drawdown for me last year and ripped me out of that drawdown pretty quick, which was awesome. So, maybe we see a repeat of that function this year. So here's the seasonality chart that I wanted to show you. So if we go in here and we select, let's see, what was I looking for? S&P 500, okay? So what you'll see here is in October and September, you get sort of this mixed / bearish monthly period. But then you get November, and November is, again, November, December are historically speaking some of the best performing months for the US stock market. There's a number of reasons or speculations why, but a lot of people during Q4, some of the big reported earnings can be really, really strong, and that is a lot of times why people get all bulled up about stocks. But regardless of the reason, even if you have no idea what the reason is, the point is this is almost like a cross between a technical / fundamental indicator, which is seasonality, because what we can observe is that during this time, we see a repeated pattern. It's not every year, and it's not a perfect indicator, but it's something to pay attention to. And it is something certainly that I am paying attention to and looking for bullish setups if I can find them and if the Edge Finder can confirm them. So I am already long the NASDAQ, which is, of course, more of a tech-focused kind of index rather than the S&P 500, which is just very, very broad. I actually picked up a long position here. I am long on the QQQ ETF. In fact, let me show you. Here are some of the ETFs that I'm currently positioned long in, which the NASDAQ is, a proxy for it is QQQ, which is an ETF that tracks the NASDAQ. So I'm long with 771 shares. While I'm on this topic, I'm also long some Bitcoin through IBIT. SMH is a semiconductor ETF, which I have a position in, and I'm also long a real estate ETF, XLRE. All of these trades I've held on to for a little bit of time, not too long. QQQ is actually a new trade. SMH is relatively new as well. So just something to point out there. So when we take a look at the NASDAQ, you can see it pulled back to support. If this level breaks, I'm fine with this, because if it comes down and retests this area, I still have a stop below. But what I'm not okay with would be if we just tank through the lows without any sort of support. If we start breaking through structure, then I need to go ahead and take the loss on that one. So do still like the indices, but only if they can continue to perform well coming from here, because we are near an all-time high. I'm not afraid of buying near all-time highs if the charts look okay, as well as the fundamental reasons look okay. I think the Fed is likely to continue cutting rates. We see the economy holding up decently well despite those pretty abysmal NFP numbers, which in fact, let's just pull those up because we just mentioned them. So if I go over to NFP charts, you can just pull this up and take a look here. What we can see is there is that horrible NFP number that came out, 12,000 jobs compared to the forecasted 106,000. So big miss on that front. However, unemployment rate out of the US basically did not move, which was arguably kind of a positive thing. In fact, it actually kind of slightly went down. So a bit of a mixed jobs report, but that I gave it a slightly bearish lean, and not just me, but actually the Edge Finder itself gave it a slightly bearish lean. You can see if we take a look at, for example, on the S&P 500, employment change, that's NFP, was bearish. Unemployment rate, because it remained unchanged, didn't really significantly move, gets a 0, right? So overall, a bearish NFP report, which impacts negatively the indices, as again, jobs data, jobs strength is important to that story. Also, because I just mentioned it, you can see all of the trades that we're taking, including the NASDAQ trade, Bitcoin trade, all the different things that I am currently trading. I trade FX, commodities, indices, ETFs, stocks, options, and we also have several other traders within our group, like Frank, who you may be familiar from the show, the live show that we do. Chris, same thing, he's on the live stream, and Ivan is as well. So the gang is all here. If you are not already in the VIP Discord, this is a great chance to get access to it. It is currently also 40% off for our Black Friday sale. We'll leave that link in the description. Some of you guys might only have the Edge Finder or only have VIP. If you are interested in getting the other, today is a great chance to do so with the promo code YTVIP down below in the description. And if you have any questions, if you send us a direct message, we may get you extra discounts. If you made it this far into the video, if you're 13 minutes in here to the video, and you send us a direct message using the first link in the description down below, we can hook you up with an extra discount of additional 5% off anything in our store. So don't miss it. It is our biggest event of the year for a pretty good reason. We do this every year, and Black Friday is always really fun. We get a lot of people a copy of the Edge Finder, join the group, and it's always a great way to kind of introduce new members to our Discord as well. It's a fun time. Anyways, I also wanted to talk about silver here. Look at silver pulling back to this chart. Almost just a perfect chart here. However, I don't fully have the right signals just yet on silver. I want to show you some stuff because I love this chart. It's so clean, but we don't quite have the reading on the Edge Finder. So let's go look at metals, right? And people might say, well, Nick, but the chart's so perfect. Just take the trade. I don't trade solely off of charts, and I don't criticize anybody who does that. But for me personally, I really, I need to make sure that the actual story, the fundamental story, is intact before touching the charts, because the charts can be deceiving. I've had lots of trades that look like this. They're perfect setups, right? How many people have had this happen to you? You have a beautiful chart, a perfect technical setup, and then womp womp, it just does not work at all. Sometimes, not always, but sometimes the reason is because the fundamentals have just changed. And if you're ignorant to why the market is changing directions, you can just take trades right in front of a bulldozer, right? The idea is sometimes you want to know, well, why did silver start to drop? Why is it likely to sustain its drop with some of the reasons? And the way that I do that is just keeping an eye on the Edge Finder score. Now, we're only at a plus, we're at a +2 here, so we're not quite bullish on the score, but let's take a closer look as to why this is. In fact, we have a data scanner for this. Let's go to the gold and silver page, and this is really interesting. So if I switch over to silver, which has a +2 score, I love this chart so much. It's one of my favorite on the entire Edgefinder, but let's go through this. GDP growth, right? We can see the numbers posted here, the actual numbers that were reported versus the forecasted numbers that were forecasted, right? For US economic data, which is of course not the only thing that impacts silver, but is a very large component. All right, let's take a look. GDP numbers missed expectations. That's actually positive for silver and gold. These are precious metals that people turn to when they're uncertain about the economies of the world oftentimes. So manufacturing PMIs also were a positive because they came in lower than forecasted. They came in weak, right? But then services PMIs were super strong, right? Super strong. So that works against us on the silver chart because again, strong economic indicators make silver and gold look a little, less shiny, if you will. Retail sales month over month were better than expected, right? That is of course not good for silver. CPI year over year, core CPI, both of these were again, a little bit hotter than expected, which reduces the chances of rate cuts, which metals really want rate cuts, right? Metal performance shines oftentimes when rate cuts are happening. Oftentimes, especially when economic data is weak, the Fed's cutting rates to save the day. That is a perfect sort of cauldron, if you will, for stewing up some bullishness in the metals. Man, I'm really hitting it with the what do you call those metaphors? I forgot all my English terms, but NFP really, really poor numbers there. So that is actually positive for silver, but unemployment rate 4.1%, not really a big change there. So, what we can see here is all of this thing that we just did, the breakdown that we did, is being factored in automatically by the Edgefinder. That's where we're getting the bias, right? Neutral bias. So what I'll be looking for on silver is, yes, the chart looks great. This is the easy part of trading that I think people overestimate. They overestimate technical analysis. They think that technicals are some, magical superpower that, we can spot a key level of support on a trend line. Like, that's so easy. What's not so easy is understanding why this trend is maybe more or less likely to continue or reverse through the fundamental breakdown. I think right now that you've got a good potential setup for silver. However, I would like to see some of these things flip into the, more bullish scenario for silver and gold before I start rushing into buying a setup. So if we see price come down and we're hanging in this area and some of the economic data indicators start flipping more favorably towards silver, then it is very likely that I will take that trade and feel more convicted that we could see some upside. But right now, I just feel a little too neutral, so I don't want to take a stab at this level of support. I hope that makes sense, but that is genuinely how I approach every week, is I need to see the economic data line up with the idea that I have. Otherwise, this idea could be very misdirecting, could be misleading. So I have to be careful with that. Speaking of top setups, let's just take a look here and see what we've got in general. Let's go all categories, except I don't trade minor currency pairs, so I'm just going to take those off. And let's take neutral readings. And what we can see here is we have a very thin list, but one that I've been watching is dollar yen. I want to pull up USDJPY here, which is a currency pair that I am watching for possible pullbacks. In fact, let me make this a little bit brighter of a white color so we can see this. So we had this big push in the last few weeks for dollar yen, right? Yields going up is definitely not giving us much of a pullback here. But if we see yields come down, likely because we would see perhaps a weak jobs number or something from the Fed this upcoming week that could sort of swing this back down. Dollar yen is one that I really like on the long side. As long as we continue to see that Edgefinder score is positive, +5 or greater, and we have a technical, pullback here, I'm very interested in maybe buying the dip on this USDJPY chart. And although it may seem far away, sometimes these yen pairs can move very quickly and give us a rapid pullback. So just something to think about, right? We get these sharp pullbacks, and if you're ready for them, you may be able to find some great opportunities. So I'm looking at USDJPY as a possible trade setup going into this week. Speaking of currency pairs for a moment, we can look at euro dollar. I would love to have seen this thing pull back a little bit more. I've been waiting on a pullback on this one as well. If we take a look at pound dollar, right? I'm mostly bullish on the dollar at this time. We also see part of the reason for that, yields are just aggressive. Look at this 10-year chart, guys. The 10-year yield is, of course, the government treasury bond yield, which is jumping up here. It's just been trending up and up recently. So we've had this big downward trend. That was where everybody was like, we're going to get in so many rate cuts. It's going to be great. And things have changed now because inflation is not quite at 2%. Jobs data is not great, but I think part of the reason this thing is up recently is partially because of the upcoming election, right? By the way, this week we will have the voting day on November 5th. For Kamala Harris and Donald Trump to go at it. So we'll see how that plays out. But I think part of the reason yields are up is because both presidents, whether you agree or disagree with the way they plan to spend money, do have big plans to spend a lot of money. And spending a lot of money is inflationary because the government doesn't have any money. It prints money when it needs money. And when it prints money, what does that do to the value of currency? It disintegrates it, right? Inflation. So inflation could be coming back. And that's the story here. That's the concern from the bond market. They're saying, well, remember, yields and bond prices move inversely to one another. Bond prices are going down because people are saying, no, you need to give us more yield in order to take that risk because the national debt is growing massively and you're printing way more money. So if I buy a bond from you, I'm going to lose a bunch of my returns due to inflation. So we want higher yields. That's why yields are going up. In my personal opinion, it is largely due to the election and the economic data of the US, which has been a little bit more upbeat than what may have been forecasted by now. So really an important chart to keep an eye on. If this thing continues to scream higher, you could see some rocky roads in metals and stocks, right? That could reintroduce rate cuts being slowed dramatically over the course of the next year. So not something that the market, especially gold, silver, S&P, NASDAQ, stocks in general, bulls want to see. So keep an eye on that. If you start to see breakouts of these key huge levels, then I'm going to really start sounding the alarm on this because now you're going back to a territory where we might not see very many rate cuts. Like if you really start to see this thing go up 5% or greater, I think rate cuts get really, really pulled back in terms of expectations, and the Fed may choose to, really slow that process, which the market would freak out about, I think. So keep an eye on yields. That is the story here in my view, and keep an eye on oil prices as well. So oil prices are down here, but if they pop up, that too could be very inflationary, right? If oil prices start to skyrocket, perhaps due to a geopolitical event or something of that nature, yeah, we could be looking at inflation coming back. Remember, when oil prices go up, all prices go up because everything revolves around transportation and movement of product, which of course requires fuel. Fuel prices going up or down can be very inflationary, right? Or disinflationary if they drop. Part of the reason we've had inflation progress this year is definitely because oil prices are down. So something to keep an eye on. Even if you don't trade these markets, use them as indicators, right? Oil is an indicator for many other things. If you trade only gold, you should still watch oil. You should still watch the 10-year treasury yield chart. You should keep a look at, what's happening with the dollar in general, right? There's so much here. Many people like to think that they're just one chart traders. If you're a fundamentalist, you can't really be a one chart trader. It doesn't really exist. If you're a fundamentalist, you look at many charts to build a full view of an understanding of the markets. So that you have a more comprehensive outlook when you take trades. So something to think about there. Okay, guys, that's all I've got. Remember, today is our Black Friday sale. We're doing 40% off the Edge Finder, 40% off the VIP membership. And if you already have access to those things, I mentioned this earlier, but we also are offering the brand new stock box, Chris Pulver's trade alerts, and much more. In fact, I'll show you if you stick around for a second, I'll show you the new stock box. Check this out. So many of you guys are familiar with the Edge Finder by now, but we just launched this new product. This is the stock box, and we've been working on this thing for the last year or so. It's been a monster to build because unlike, Forex and, trading indices, commodities, there's not that many charts to track. With stocks and sectors, there's so many. So that makes it a little bit more difficult. So the data mining that we've done to build this thing has been immense, but it's finally at a point where we have something ready for the stock and options and ETF traders out there who, are my people. I trade those things all the time as well. So, when we take a look at this stuff, We have top sectors here. So when we take a look at like real estate, utilities, consumer discretionary, we've got, all sorts of different things here you can select by this. This is one of my favorite charts on the entire tool, because just like the top setups analyzes, indices, commodities, currencies, the top sectors for the stock box tracks sectors like real estate, or, like I said, financial services. You can look at all these different sectors and break down the key economic data points that are impacting them. Some of them have flipped a little bit more bearish here recently, which I thought was very interesting. We also, of course, have the top stocks page, which using a financial score that we've built, a trend score, a 13F score, and an insider score, we've got some of the top stocks. And you'll see Tesla's on here, which is a stock I've been trading a lot recently. You can see here is the Tesla calls that I've sold, the Tesla position that I have, and I even sold more puts here. So I've been trading Tesla quite a bit. It's one of my most profitable. Actually, I think it's one of the most profitable stocks in my account ever. I've made a lot of money trading options and the stock itself on Tesla. But I have a very bullish outlook for Tesla overall. And you can see I've got that +10 score on the top stocks page, getting a very bullish evaluation, which I'm really excited to have this for stocks because there's so many stocks. It's really important to start being able to filter them rapidly. If you're somebody who does trade them or you watch stocks on a regular basis, this product might be for you. We have a smaller group of people who are interested in stocks than, indices, commodities, currencies. However, stock people don't mess around. The stock people are, they're looking for data. We've had a really great response so far for this launch. We're thrilled about this because, again, on our end, you can imagine there's a huge investment in building these tools. So we have had some good interest so far. And to kick things off, just like we did with the Edge Finder sale, 40% off, we're also doing 40% off of this brand new tool. It brings the price down tremendously. And I want to just give you a warning. If you made it to the very end of this video, 26, 27 minutes in, just a heads up, we're doing 45% off if you send us a direct message on our website for anything that we discussed in this video. 45% off if you speak to us on the site. The reason we do that is because we prefer to speak to customers before they purchase. It gives us a chance to just make sure that the tool is the right fit for you, to answer any outstanding questions you have about the tools that we're offering. We enjoy talking to our customers. So if you'd like to speak with us, it's the first link in the description down below. They'll get you all hooked up with a copy of the stock box, the Edge Finder, or access to the VIP room if those are interesting things to you. So that's all I've got here, guys. Thank you very much for tuning in to today's video, and we'll see you back this week for an exciting week. We got elections and we've got the Fed meeting. Oh my goodness, it's going to be crazy. Thanks for watching, guys. Have a great day.